Everyone, and welcome to our continued discussion on this topic, IFRS 16 leases. In this particular section, we're going to talk about how do we measure the liability component in our balance sheets when we enter into, let's say, a lease agreement, right? Friends, one of the things that is critical to understand here is that any lease arrangement under IFRS 16 would remove the off balance sheet financing arrangements wherein it brings in virtually all the leases under the balance sheet criteria, wherein we have a liability on one side and of course an asset on the other, right? While it is important to understand what is the value of the asset, or at what value do we recognize and measure an asset under a lease arrangement, one of the important components of the value of an asset is described through adding something called as the lease liability as a part of it. So unless we have understood the meaning of what is a lease liability, it would be not possible for us to understand what is the value of the asset. And that is one reason why we want to discuss today the measuring of liability under IFRS 16 as the first point of discussion, and after that we can certainly talk about how to measure the value of an asset if it is taken on lease, right? When I look at a lease liability, it would incorporate virtually all the payments with respect to lease of an asset, right? And these would be of course discounted at present value to of course determine the liability portion of the lease, right? So the lessee or the user who has to pay whatever amounts to enter into a lease, those are discounted at the present value with an appropriate discount rate, either implicit in the lease, or we look at the incremental rate of the leasing. We're going to talk about those concepts of course during a later stage, but predominantly we are saying that whatever future payments you are required to make with respect to the use of the asset under the lease, they would be discounted to their present value to be able to measure the amount of liability in the books, right? Here what you need to consider is identify fixed payments, right? That is one key criterion, that you need to identify all the fixed payments which are related to the use of the asset over the lease term. So I may say identification of fixed payments over the lease term, right? So when I say I'm looking at a fixed payment, it does not only mean I'm looking at something which is absolutely fixed, but these would include something that is fixed in substance, right? Something that is fixed in substance. The very intent of the payment should reflect the very manner, the very condition of those payments should reflect in terms of how much amount is certain to be paid to the lessor, right? So if I say, for example, the lease agreement states that 20% of sales, but a minimum of, let's say, $20,000 per month, right? So my lease agreement says that over the lease term, over the period of lease, the lessee should be paying 20% of the revenue generated out of, let's say, 20% of the revenue generated by the use of the asset, subject to a minimum of, let's say, $20,000 a month. Now, this is essentially a variable component, but this becomes, of course, the fixed component that needs to be considered in determination of the lease liability, right? So what we are saying is something which is fixed in nature, or at least in substance, a certain fixed consistent amount that would always be received, that should be considered as a part of your lease liability, right? That may further mean, for example, if I say that I'm receiving $10,000 per month for 12 months, right? This increases 5% per annum for the subsequent 24 months. This increases further by 10% per annum for the, let's say, next 48 months. Now, these are essentially fixed amounts, right? But if I say that there is a $10,000 per month plus 2% of sales, let's say 5% of sales in the next 2 years, and let us say, for the sake of it, 10% of sales in the next 4 years, this component is essentially variable and dependent or contingent on the sales, right? It could be a percentage of profits as well, does not matter, right? So the standard suggests here that any such components, which would be, of course, very difficult to measure, they will not be considered under determination of lease liability, but yes, they would be charged to income statement when these arise, right? So something which was, let's say, defined under IAS 17 as a contingent rent, it again does not come into the picture in the definition of lease liability under the IFRS 16 accounting standard as well, right? So something which is fixed or in substance fixed in nature, that would be considered as a part of your liability value, right? So one of the components here when we determine the value of the liability is the fixed payments. Subject to any incentives received. So it may so happen that the lessor or the owner of a space or maybe of an asset gives you an incentive to enter into a lease arrangement. As a lessee, you have never paid that amount, but since you are receiving something, so effectively it reduces your total fixed payments, right? So precisely what you need to take care of is any incentives received, they should ideally be reduced from the value of your liability, and they cannot be considered as a part of your income as a lessee, right? So this is one part. The other portion that comes in, where we look at, okay, let's even say that fixed payments in substance fixed, right? So even though it appears to be a variable amount, as per the language of the contract, if the very measurement basis of this suggests that a particular payment could be considered as fixed in nature, that will be included in the value of the liability at the time of initial recognition, right? That is one part of it. The other one, we are saying it includes certain variable lease payments, for example, which are based on an index or rate, for example, your consumer price index, the inflation rates, for example, right? So if I say that today I'm entering into a lease agreement where I say that based upon the inflation index, my future rent will be charged, right? So I need to measure this to be able to quantify the value of the liability. So I need to measure this amount. Of course, if I need to use a discounting because the payments are happening at a later point in time, I need to bring this into consideration for the purposes of measurement of my lease liability, right? Please bear in mind that if these payments are more of a recharge, right? For example, let's say payment of utilities or for the rent agreement, registration, etc. These are not covered as a part of your lease liability. So something that does not accrue to the owner or the lessor, that would not form a part of your lease liability, right? That would be obviously separately considered as another liability if it's not paid, let's say in a particular period of time. So that is something that you need to kind of take care of, that any variable lease payments which are primarily driven through an index or let's say a rate like a LIBOR or a MIBOR, that is where you need to kind of bring that component also as a part of your lease liability. Please bear in mind that any variable component based on sales, that is not considered for the purposes of lease liability. So if I say that a real estate developer creates a space as a food joint, and the tenants who take this place on lease, they might be required to pay 5%, 10%, 20% of the sales as as a part of the rent, which is a very normal arrangement nowadays. This contingent rent, this rent which is based upon the value of sales, is not considered as a part of lease liability, despite the fact that this liability could be of a significant, this amount could be significant in terms of the value. The reason is, what the standard suggests is that it could be too much difficult for people to comprehend, or people to, let's say, measure what is the right or expected value of sales, let's say, from a particular tenant. Although there are of course preconditions, there are protective rights available to the lessor, where he confirms that the sales can only be made through some coupons which are controlled by the lessor himself. It does not mean that any variable amount of rent which is based on sales would be considered to determine the lease liability, right? It would be worth noting here, by the way, is that out of this variable amount based on sales, if you are able to find something in substance which is fixed in nature, for example, we said that 20% of sales subject to a minimum of $10,000 a month. Now that $10,000 becomes your in substance fixed payment. So something that you need to really be conscious of while drafting your lease arrangements, because the accounting would change considerably if these kind of clauses are created, right? The third component which comes into the value of lease liabilities amount expected to be payable by the lessee under residual value guarantee. So let us say that if I were to put an example around this, I'm saying that I'm using a machine for 10 years, and I know that the overall life of the machine is probably 12 years of 12 years in total. So the physical useful life is 12 years, but in the 10 years time I would have virtually made the entire use of that asset, and it may not be that productive after the lease term of 10 years is over. So my lease agreement may provide that if the value of, or the residual value of the asset declines below a particular level, then I need to pay for that particular difference as well, right? So something that you need to consider, that essentially this is an amount which is expected to go out of the pocket of the lessee by virtue of the economic use of the asset. So the entire intent of the standard goes into how do you derive the economic use of the asset should create a corresponding liability in your books as well. So something which is a determining factor is the economic use of the asset under consideration. The next point that comes here is, it talks about the exercise price of the purchase option if it is reasonably certain that the lessee will exercise the option. So if I say that I'm using an asset for 5 years, so my lease term is 5 years here. Okay. Now what we are saying is, after 5 years there is an option to buy the asset for $10,000 and the market value of this asset is likely to be, let's say, $100,000, right? What we are saying is the lessee may buy this for $10,000, but the market value is likely to be $100,000, which means that this option will be certainly exercised. Quite clear. No reason to believe that this option will not be exercised here, which means that the lessee will pay. No reason to believe that he will not. He will pay this $10,000, which in substance makes it a fixed payment in terms of its nature, right? So something that we need to kind of consider here is the exercise price of the purchase option, if it is reasonably certain that this option will be exercised. And finally, we are saying penalty to terminate the lease when it is reasonably certain that the lease will be terminated. Again, in lines with what we talked about, the exercise price of the purchase option. Put it like this, that I'm using a particular asset under a finance lease. After the lease term is over, let's say, after 5 years of time, the agreement requires me to pay, let us say, 10 times the value of the asset if I were to, let's say, continue or, let's say discontinue the lease. So the whole idea of this penalty to terminate the lease is, that I would not probably in a position to terminate that lease if the penalties are into existence. So when you look at these kind of instances, you need to really kind of bring into consideration that in substance, so that is something which is the key element. In substance, are you certain to pay something which is fixed in nature? Are you as a lessee necessarily required to pay something which is determinable, something which can be determined as a part of the use of that particular asset, right? So that is something that we wanted to briefly talk about. Let's say how to measure the liabilities under IFRS 16. We surely would be discussing more around the IFRS 16 in the future lectures. So do keep watching these videos and subscribe to the lectures, and have a good day. Good luck.